Hello and welcome to the breakfast stream. We now have a name for this show. Breakfast stream with Jose and myself. Hello, good morning.
Good morning, Neil. Good morning, everybody watching. Yeah, pretty good, Neil. I think we've been pretty consistent this week, so I'm pretty happy about ourselves here. And hopefully, people have been enjoying the show. We got a lot of stuff to cover in today's episode. We had Oracle report earnings yesterday, right, Neil? We have AMD's kind of preview on the AI events that we will stream also later today. Christian says there's a bloodbath today. I haven't even looked at the stocks. I haven't even opened up news, so I don't know what's happening since last night. But good morning, and some interesting things also, Neil, that I think you are seeing in the fintech space, I believe, or just in the
we
IPO
have
space that
Chime going public today.
Yeah, so that's going to be interesting as well. So yeah, good morning, and I'll pass it over to you, Neil, to see where we want to start off today.
Actually, maybe we can start off with this question. So first of all, good morning, everyone. It does seem like futures are down a little bit. Stock futures fall as Trump threatens unilateral tariffs. So we're back with the tariff story. And we also have the UK economy that shrank sharply in April. So that's not great. NVIDIA CEO tells CNBC that Huawei has got China covered if the US does not participate. So not great. Their European markets were also down today, other than the FTSE that was basically flat-ish. So maybe we do get our deep opportunity finally starting today. So to answer here the question, you planning to add anything today with this red or waiting for more red? Me personally, and I think Jose, you as well, you have a list ready, right? In case it hits the price targets. And by the way, we are streaming on YouTube and on X. You can submit your questions wherever you want. I am looking, of course, to add more Nebius. I don't know if I'll get the opportunity to buy under 40. I don't know. We'll see, because Nebius is announcing quite a lot of things more recently. They're still busy in Paris, and I think tomorrow the CEO is going to talk. So right now, after hours, we are back under $50. So Nebius is probably one I will add, maybe closer to the low 40s. That's something I'll keep an eye on. Then I'd say AMD, but that depends on what's going to happen later today with their event, what they're going to announce. And that's about it. The others are the usual ones, right? Uber maybe under 80 if that happens. Alphabet if we go back to 150s. I'd say those are the ones high on my list to add more.
Yeah, I'm looking at pre-market right now. Nothing that really grabs my attention too much from the normal list right now. And I think we talked about it. We were pretty aggressive, it seems, during the dip. That like right now it's more, it does a 1-2% dip here doesn't really help me too much in my opinion, but there are a few outliers, that have kind of dropped in price a bit. Marvell would be one on my list if it drops a little bit more. I wouldn't mind adding at these levels. It's like 68, and I think pre-market is like 66, 67. I don't mind Marvell Technologies. I think they have a nice future, growth opportunities. The other one, Neil, is GitLab. They just reported earnings, and I think we talked about it yesterday, where while I do see kind of the fear that came from the stock reaction, of kind of like competitors and some of their guidance not being increased, I still believe long term that is another kind of growth play that I want to play. And both Marvell and GitLab for me, Neil, are those kind of growth companies that, well, they might not be the number one player in their space, and when there is competition, I do believe there's optionality for them. The other, I do have kind of other three, Neil, that you mentioned. I do believe Google, if I can get it even lower, that would be a great. AMD as well, and Google, AMD, and Uber. Those three, I think those five are the ones on my list right now, as they're not too crazy right now. And a nice dip on this would just make them even more attractive. So for me, Marvell, Uber, AMD, Google, and GitLab. And we'd love to hear from people watching, right? Sometimes I might forget some names that I might be overlooking. So if anybody has any thoughts that of some stocks they would love to purchase, maybe even not now, but close to, maybe if it drops a little bit more, what they're looking at right now.
Yeah, exactly. It doesn't need to be like the price of today. Like if you have specific names, a list of names of stocks you would like to buy, if it enters that buying zone, let us know. We'll check it out. Maybe we are also missing some of the names. So do let us know down in the chat below.
So Neil, I feel like you brought something about NVIDIA and Jensen, about kind of the Chinese market, right? Because I want to cover it a little bit, because it seems like there's a little flip flop happening where a few weeks ago Jensen mentioned that Huawei was only one generation away, but then yesterday's Q&A session, he kind of mentioned that Huawei doesn't have the power efficiency as NVIDIA, and maybe, but that's okay for China. And then I think today we see that there are reports that Huawei has got China covered if the US doesn't participate. So I just kind of want to bring up what's happening. So one thing that NVIDIA CEO Jensen mentioned is that electricity is very cheap and they have an abundance in China. So while one of the things that NVIDIA has to do, Neo, is you have to make your chips even less power hungry based on your performance. So that's kind of like that power to watt efficiency that we're seeing. And NVIDIA, even though maybe the Blackwell 200, the B200, or the B300 uses more power technically than the Hopper platform, if you look at the power rating, it's like you get more performance per the power, and that's what you need to do. And that's very important here, because we do know we're like power limited, Neo, in forms of electricity infrastructure. In China, that's not the case, right? So Huawei has the opportunity to not worry about the power issue too much, or the power efficiency. They could just put more chips together. And it seems like we did lost Neo there, so hopefully we'll be back. But obviously it comes with caveats, right? You still get things like overheating issues. You can't put all the chips in one racks, but it does seem like, at least for now, the Chinese space, not any other space, can survive in this AI race without NVIDIA. And I don't know if Jensen just does this to kind of also make it seem like we have to reopen up some of these export restrictions. So I do believe there's a little bit of business happening between the two. So just wanted to share those thoughts. We're going to wait here for Neil to come back. But I want to see some of the stocks y'all were looking for. So here we have we have Meta. Meta's interesting, right? Definitely one HIMS below 50 for sure. This is definitely not a market that I don't think Neo follows too much. But HIMS below 50, I know that's been very popular. OSCR, I'm not too familiar, Nick, what that one is, but OSCR under 13-ish. We also do have Hood below 65. If I was to enter the fintech market, I think I would love Hood, but it's not one I'm entering anytime soon. Oscar, I keep this one's becoming very popular. I would love to hear from the chat. It's not a market that I follow too much, so would love to see what are your thoughts on Oscar here. We have here Nvidia, Palantir, two bangers there. Again, a lot of HIMS, and Rocket Lab as well. I got into ACMR at 15. I told you guys a couple of times. Nice, Christian. Pretty good here. Sometimes not. It's okay to miss out if we don't understand the business, but congratulations. Oklo is sinking. I'm pretty sure Oklo had a massive uptick the past. Sorry, Neil just texted me. It seems like he did lose connection. Hopefully he can get it back and running. If not, you guys are stuck with me for a while. Let's see. Oh, nice, Christian, on SMCI, most effective. In our usually, I mean, I can see the overall excitement for Supermicro, for Dell Technologies and stuff like that, but it's definitely not a market I like to invest in too much. Oscar Health, Jose. I'm not too familiar with it. It's probably something I use. Maybe people use, but I'm not too familiar. Dino, what about Chime IPO today? So yeah, once we have Neil back, he's our fintech guy, so he'll talk a little bit more about Chime here. But let's see, we have a lot of comments coming in, so I'm pretty excited here. ASTS, it's another one. Lulu, we have there. Can we have a preview on Palantir? I'm not too sure what Palantir is going to be doing today. But let's see, what else do we have? Any questions coming in? IBM sounds like an interesting bet too. Growth has lagged, but maybe in near future. Movies, I mean, this is interesting, right? Because I think like IBM even a year ago was seen as not the best stock to purchase in this AI market, but lately this one has been pulling up and ripping. Let's see. Let me just text Neil real quick while we do get some questions coming in. Maybe I might even cover Oracle really quickly. How about Dell and Reddit? Come on. So, I mean, Dell, like I mentioned, I'm not a fan of kind of the hardware space, even though you are seeing kind of this AI boom and you're seeing massive AI infrastructure. Reddit, it's funny. We actually talked a little bit about Reddit in one of these streams when the stock was at $100 like a few weeks ago. I think the stock has rallied a nice amount. I still haven't done my DD on that one, but it's one that's on my watch list to do DDs on. Igor wants to buy a girlfriend for $20. Not sure that's legal, but let's see. Guess it depends where. Marco, this is such this is such a typical, I want to say, mentality. It's that cost basis mentality that once you buy a stock at a cheap price, it's very hard to buy some more. And I definitely understand it right now, especially, right, Marco, because I believe it's very similar to CoreWeave, right? The stocks have rallied up a nice amount in just a few days or in just a few weeks. Oh, welcome back, Neil. Amateur hour here.
Someone asked what I'm about to buy at the dip. I guess I'll buy a new internet provider. That's what I'll buy.
Yeah. All right, Neil. And we have adding GitLab at these prices. I do think GitLab, again, I've talked about it in the past. I'm pretty bullish overall. But yeah. Neil, we had some questions about Chime. I don't know if you want to start off there, or we can go to maybe AMD preview or Oracle earnings, whichever you want to head off to next.
Yeah, we can do Oracle first because that's one I saw the price of the stock go up yesterday. I saw some nice growth numbers, but I did not dive deeper into that. I do have a couple of things to say about Chime, but we can do that afterwards because it's going public today, so we don't really have that much information other than their own SEC filings. But we can touch on Chime in a bit. So let me pull up. I'll pull up Oracle on the FinChat.
Yep, sounds good, Neil. And Neil, I mean, Oracle definitely had a great quarter, but to me, Neil, I'm surprised that many were surprised that this was eventually going to become the AI story. I guess the reason being, I mean, we talked about Oracle in the past, right, Neil? And I guess many people weren't expecting it to start happening so quickly. So let me just kind of read some of the main things that I think investors got pretty excited. So Q4 remaining RPO was up 41% to $138 billion. The other thing that we are seeing is the company does expect very, very strong growth for fiscal year of 2026. So quick caveat, they just ended their fourth quarter of fiscal year of 2025. So they're a little bit ahead of calendar year and they're maybe like off one quarter. So they're just starting fiscal year of 2026 right now. So they mentioned fiscal year of 2025 was a good year for them, but they believe fiscal year of 2026 will be even better as our revenue growth rates will be dramatically higher. We expect our total cloud growth rate, applications plus infrastructure, will increase from 24% this year to 40% in fiscal year of 2026. They also mentioned that cloud infrastructure growth rate is expected to increase from 50% this year to 70% next year. And RPO is likely to grow more than 100%, Neil, in fiscal year of 2026. They also believe Oracle is well on its way to not only be the world's largest cloud application company, but also the world's largest cloud infrastructure play. So I have other things there, Neil, but normally when you see some strong growth rates, the next year you also still see some strong growth rates, but you see kind of percentage decrease down because it's kind of, you're starting from a larger base. Oracle is actually saying the opposite here. They're obviously starting from a larger base compared to fiscal year of 2024, but they're expecting their growth rates to be much higher due to the overall demand. Neil, during the earnings call, they even kind of he used a lot of adjectives he used a lot of adjectives. Both Larry and Sarah, I believe. I think it's Sarah, the CEO.
Safra
Used a lot of adjectives.
Yeah.
They like Safra. Okay. The kind of just insane growth, insane demand. They've mentioned two stories, of customers. One of the customers that they mentioned was they just called them up and said, "Look, I want all the capacity that you have available to you right now. It doesn't matter where it's at. I just want it right away. It could be in Europe, it could be in Asia, it could be in USA. I don't care." And he's like, he's never had phone calls like that before. And he's getting tons of phone calls like that where they just want the capacity as soon as possible. They also mentioned, Neil, that they've had ways of that now they have to actually tell customers, sorry, we can't offer you a solution, or if we can, we have to put you in schedule very far off in the stuff in the calendar, and people are still willing to do that. So he says that's something that they've never done before. So it just shows you the overall AI demand that they are seeing. The final thing, Neil, I want to mention, maybe we can look at some of these summaries here. But the final thing that they mentioned, Neil, was capital expenditure is expected to be $25 billion this year. And last year was actually expected to be about $19 billion, or the year that they just ended, but it actually went to $21 billion. And the reason being is like, hey, look, we had the opportunity to buy more AI chips and we used it. Even though we had guided for 19 billion, we knew that these chips are revenue generating products. So we took the opportunity to get those chips that we could. And they mentioned that this 25 billion capex, they believe it's going to be way over it. This is just a baseline. But if they get the opportunity to buy more AI chips, they will gladly do it because of the demand that they see. So those were, I want to say, the main highlights from earnings. And it's just that overall AI demand that is still pretty strong right now.
Very good summary, I'd say. Very good summary. The growth rates are insane, right? The fact that RPO is going to grow more than 100% in fiscal 26, that's insane. Cloud infrastructure growth rate to increase 50% in fiscal 25 to over 70% in fiscal 26. We've got that here in that summary. That's crazy. And then they say here beyond fiscal 27, I'm more confident in our ability to meet and likely exceed our previously provided fiscal year 2029 target. So clearly they're doing everything they can. And if they could be doing more, they would be doing more. That's for sure. Insane company. That's why it's up now 8.3%. We can actually look at run some of the trends here for the last couple of quarters. Let me show you guys. By the way, all of this is, of course, available on our new sponsor and partner of this stream, Breakfast Stream. Very cool name. That
The
very
stream.
original, I'd say.
Yeah.
Let's see, remaining performance obligation. Look at this growth. This is insane.
Yeah, that is wild. And I think it's just going to get harder because it's going to get bigger. Just I think one of the big aspects of that 100% growth, Neil, is going to be the Stargate projects that they will be building. I guess I'm not too familiar, Neil, and excuse me for not being too familiar here with how the accounting of RPO works. In my opinion, I believe they need to have kind of like the infrastructure at least available before they can even promise it, right? So I think, for example, the Stargate, not much of it is if that is here, because it's still being built in the United States, and then we have other Stargate projects. But I think the Stargate is going to be one of the best places to see a massive growth in RPO here.
Which is probably why they expect to see that 100% increase, right, in fiscal 26. That's probably the reason why they still expect such a big increase. Now, of course, revenue-wise, where do they generate it? We can also look at that for a second. Comes at no surprise, right, that the US is the largest chunk. Has been for a while, but that's growing much faster than the other. I mean, we go all the way back to 2019, but let's go and look at since, let's say, the AI hype cycle started or something like that. We see that America's revenue grew at a compound annual growth rate of 14%, Europe, Middle East, Africa 7%, and then Asia only 1%. So definitely a huge focus here on Americas. But as we've seen, we are expected to see a lot more from the UAE, Saudi Arabia in the upcoming years. So revenue diversification is definitely something that's going to happen over the next couple of years. So yeah, Oracle, I mean, incredible. We've talked about it a long time ago, but right now it does seem like the stock currently is going up now because they're showing the results. Right, a year and a half ago we talked about it, and the stock was right around, where is it? Right around here. Stock started to go up because they started to show some results, but then it started to go even higher, just purely based on speculation and what it could be doing. Then it corrected itself, and now we're going up because, well, we're seeing RPO grow, we're seeing their targets being met and actually exceeded for fiscal 27, 29 as well. So yeah, incredible performance.
Yeah, and I think you made up a great point there, where I do believe maybe a little bit less than a year ago, when we saw kind of those valuations grow dramatically for Oracle into the 180s, I think the market was preemptively asking for too much. I think where we're at right now, I do believe we've seen PE ratios in the past. Like I think during those times, in the first time we kind of saw those highs, the valuation of this compared to a Microsoft were so similar. So to me, it doesn't make sense sometimes when they're so similar. I think right now there's a bigger divergence on kind of like some of those metrics. And it actually gets me a little bit more excited that maybe this time it's not, we're seeing those actual numbers. So it's the right reason to go up. Where last time the reason why it was going up was mainly due to the hype of what is happening right now, but it may became a little too early. But yeah, Neil. So yeah, I really enjoyed this. One I'm going to continue to hold in my portfolio. And maybe we can give the people what they want. It seems like a lot of people want to know about Chime and some of these fintech products right now, Neil.
So luckily for all of you, I have a video going live later today talking about SoFi and Chime more in depth. But SoFi right now, yesterday went back above $15 for the first time in a while, I'd say. The stock was also then up for the year, finally. But now, pre-market, we're back down $14.82. Now, Chime is going public today at a valuation between, I'd say, 11 to 12 billion dollars. That's what I've been seeing. Could be higher, as we've seen with Circle. Circle went public, stock shot up. I think Circle went public $31, stock opened at 60s or something like that, and now we're at 116 or so. I actually did a video about Circle yesterday. Very interesting, but plenty of risks, especially at the price that we are at right now. CoreWeave, of course, went public earlier this year. Your favorite meme stock, Jose. It's a joke. It's not a meme stock. It's actually a pretty good company. And maybe we can talk about
favorite meme valuation.
Exactly. And maybe we can talk about it a bit later, right? Because I think you sent me something with regards to OpenAI and Google and CoreWeave being in the middle. But yeah, so we have CoreWeave that went public. We have Circle that went public. I'd say 2 successful IPOs for the year. It's been a while since we've had successful IPOs. Now we have Chime. Now, since Chime is another player in the fintech space, of course, it will be easier, I'd say, for the market to start comparing maybe a Chime to a SoFi, because for some reason we've always compared SoFi to a Robinhood, although not everyone, just the ones that hold one or the other. Okay, you do you. But and let me pull up some of my slides here just to show you Chime's performance as a business. Of course, not as a stock since it's not public yet. But it could be interesting for a SoFi to have a Chime that is public, because then you can start to compare, although it's not apples to apples, but you can start to compare one company to the other. If one is showing weakness, the other one is showing strength, you can actually see which is doing better in uncertainty, which is doing I don't know.
I think we might have lost Neil again. Oh, yeah, you're back. You're back though.
Yeah, I am.
Neil, quick question here with Chime and SoFi. I think this is something I've been seeing a lot too, of this thought process that now we have something to compare with SoFi. If you were to give me maybe like a very, very rough average estimate of how much they overlap, like do they overlap 70% of the market, 80% of the market, nowhere near that high? And also maybe what is kind of like, I don't follow neither of these. What is the size difference between them in forms of like maybe members or whatever type of metrics you might care about as a fintech? Like what are the difference in sizes between those two?
Yeah, so as of course I cannot use either SoFi or Chime because those are US based companies and products currently available. And by the way, for everyone listening, if you want to correct me if I'm saying something wrong, because I'm not a user, please do so in the chat and I'll correct myself, of course. From what I've been seeing from Chime is there are some similarities, right? As you can see, they offer checking accounts. These are basically the products that they're offering. Checking accounts, ATM, cash deposits, get paid early, Chime debit cards. Here they're showing us the average revenue per active member. This is the amount of members, active members, 8.6. So it's not apples to apples because SoFi is showing us total members and this is showing us active members. So it can give you an indication. You can also calculate yourself, right? How much revenue SoFi can generate from its members and how much a Chime is actually generating here from its members. I think for Chime, it's more of a consumption spending type of business model. Like the more you spend, the more you interact, the more they'll make. With SoFi, of course, it helps them, but it's not a necessity, which is probably why they've been doing well even when the macro is not doing well. FICO score wise, SoFi is also quite high at an average, I think 750. So when you have such high quality members, you can do well when times are tough. So Chime is doing very well, by the way. Chime is doing well. You have here some of the indicators. some other metrics right here. Maybe let me move our pretty faces. Let's put ourselves maybe at the bottom here. I'll show you. I'll show you some of the others. So revenue, of course, has been increasing over the last couple of years, same as gross profit, net income and net margin. You might say, oh, look, it's still negative while SoFi is positive. Yes, but over the last quarter, it has actually improved and went so up. We go back up. As you can see right here, net income is positive. Net income margin is positive as well, although still far away from where SoFi is at the moment. As for revenue, I guess we go back down. As for revenue, it has grown 26.7% from 22 to 23, and then it has seen some acceleration, 30.9% year-over-year growth from 23 to 24. So great. They've got momentum. Same for gross profit. Total operating expenses followed that trend. So it only increased 1.7%, and then it increased 18.1% from 23 to 24. Shares outstanding, of course, increased 9% from 22 to 23, and then 2.9% from 23 to 24. And as you go public, of course, don't be surprised if that jumps. That's just the usual way of going public, I guess. Then we've got here a nice trend. Tanner Future Investing shared this on X. He loves his charts, so shout out to him. And he basically compared here SoFi revenue growth compound annually. So SoFi over the last 3 years has grown faster than a Chime. SoFi is, of course, growing adjusted EBITDA. Well, has more adjusted EBITDA, and the margins are also higher at the moment compared to Chime. Same here for net income. Now, of course, since SoFi has a bank, since SoFi's business model is a bit different because you've got loans, so you've got more pressure, let's say, on the balance sheet, which is something that they are trying to diversify more and more with the loan platform business, right? Fee-based revenue, lower risk, higher margins. They're trying to bring actually the loan platform business to $1 billion annualized revenue run rate. I think that's going to be a big, big deal. And if that happens, then you can have that multiple expansion for SoFi because you will have higher margin business, higher margin revenue that is also growing much faster. And so SoFi, $16 billion in market cap, Chime going public 11 to 12 might go up even more. When you look at all the numbers here in the growth rates, you're thinking, okay, either Chime is mispriced on the upside or SoFi is mispriced on the downside. Because if the difference is only $4 billion, but as you can see, SoFi is growing faster, it's bigger, then clearly there is something wrong. Now you might say, yeah, but if Chime continues like this, it will have higher margins, capital light, whatever, then it deserves that multiple, that higher multiple. Okay, but SoFi is also going into that direction, and it is already more profitable at the moment, despite being a bank, despite having that pressure and risk on that balance sheet. So yeah, I don't know. The market is a bit strange, but I am happy as a SoFi investor to see Chime going public because I do think that will just put more pressure on less, let's say I wouldn't say less profitable, but less high quality fintech businesses. Maybe that's a better way of putting things. We also had actually, by the way, for those that don't know, this 4% APY is only for new accounts that you open on SoFi. It's not for existing one. Very important to note. And we do have an analyst that initiated coverage on SoFi, overrate rating, and a $20 price target. Very good to have new analysts covering this company with a fresh perspective rather than having the old analyst always coming with the same, $8 price target and still the age-old arguments. So yeah, that's pretty positive. So I'm quite excited. I'm not going to say, oh, I'm a hater of Chime. No, it's a very interesting business that I'll follow quite closely. And it's another one we can put in that fintech basket and start to compare, although with always a little asterisks at the top because it is not exactly the same company. But when one company will perform better than the other, and one will use macro and the other not, then I guess you'll see how strong one is compared to the other.
Neil, question here: would you happen to know what time the IPO would go public
I don't know.
today?
There's usually that time difference, right, between going public and the market opening, right? Because it's always, I don't know.
Hmm.
Sometimes it's at noon Eastern or maybe 1 p.m.
Yeah, normally I
Yeah.
see it at noon
So I don't
Eastern.
know, but
Yeah.
I mean, have you ever bought a stock when it went public, like the day it went public?
The day of, I don't know, Neil. I know I don't buy too many IPOs. I don't remember. Maybe Unity. Actually, I don't know. If it skyrocketed, probably not. But if anything, maybe Unity was the only one that was somewhat excited about. Neil, so you're excited about Chime going IPO. I think maybe one of the things that can also come here with it is, and more for as a SoFi investor, because you get more eyes on just the
Mhm.
fintech space that this company hits. So maybe obviously if Chime becomes very popular, you tend to have maybe more analysts focus on this sector and maybe start to see just more coverage, which in theory could help more retail investors become familiar with this space. Am I correct to say that's one of the reasons you're excited? Just because maybe it could increase the overall exposure and bring to light some of the strength that SoFi has that might be kind of hidden at the moment due to the lack of coverage.
Correct. And I mean, it's the lack of good coverage, I'd say, because there is coverage. It's just coverage that for some reason doesn't cover it as it should. Um, but at the end of the day, at the end of the day, SoFi needs to deliver, needs to execute, and the stock will react accordingly. They tell us, of course, there's the tech platform, right? There's this whole debate: is it a tech company or not? It's the company's name is actually SoFi Technologies. Funny enough. But the tech platform has been, of course, not growing as fast as expected. There are various reasons for that, but they already told us a couple of times that they've got around 10 deals that will generate revenue for them in Q1 26 that did not generate revenue in Q1 2025. So that's 10 deals that we will see a huge impact in 2026. We've got the financial services side of things, which is the segment where you have the loan platform business, that high margin fee-based revenue that continues to grow quite fast. Contribution profit is also increasing there. So patience. I know some people will always compare, oh, but look at Robinhood. It went up already so much, and SoFi is only up 100% in the last year or so. That's not good enough. So yeah.
Yeah. So No Lag thinks it's gonna be after 11. He thinks, and Neil, I don't follow. You know me, I don't follow too much the macro events, weeks, and stuff like that. But we do seem to have some numbers here on PPI and May PPI. It seems, at least for certain things, it was better, or at least meeting
So
estimations.
another good reading.
So nothing seems to yeah. What else do we have, Neil? We do have AMD's earnings. Let's see if we have any
Event.
questions coming in. Any thoughts? Oh, AMD's event. What did I
Earnings.
say? Earnings. Okay. Let's see, Neil. If both companies were $1, would you still choose Nebius over CoreWeave?
Yes.
It's all about market cap, right?
Yeah, but I guess his question is also if it's the same market cap, it's the same. Yeah.
Price. Yeah. If it was the same market cap, you would, even though one has like way more sales than the other.
Yeah, just because of the growth prospects. I understand that at $1, same
Prospect.
CoreWeave is much cheaper, right? Of course, like if CoreWeave is $1
Yeah.
billion and Nebius
Yeah.
is $1 billion, of course CoreWeave is extremely undervalued because of how much they generate. But they also have high concentration of a couple of clients, right? OpenAI is now a big partner for them, which is. You want to talk about that maybe in a bit, like now, or you want to talk about something else?
Sure. Yeah, we can talk about it. I don't know if we want to jump into
I'll pull up the
AMD.
Yeah, I'll pull up the tweet on the site.
Or pull up pull up the article. Go ahead. Pull whatever you pull up, we can talk about, Neil. I'll let you drive the ship today, you know.
It's that.
Even though you drive it every day. But today I'll let you do it.
By the way, okay, actually I'll show you a couple of things. One on Micron just came out, I think. We talked about Micron, I think, yesterday about the investments. So apparently, Micron is going to invest $200 billion in US chip manufacturing and R&D. They plan to invest $150 billion in US memory production and another $50 billion in R&D by 2030, backed by the Trump administration. The move includes over 6 fabs across Idaho and New York and aims to produce 40% of Micron's DRAM in the United States. We talked about this yesterday, right? The fact that they actually didn't even start to do anything. I think in the New York one. So interesting announcement. Interesting announcement, and probably one of the reasons also why Micron has gone up more recently. It's always the same thing, right? The market always knows something before it goes public. Although with Intel 2 days ago it was up 8%, and yesterday it was down 6%. So I guess the market doesn't know anything about my poor Intel.
But yeah, I mean, Micron, I think it's easy for them, Neil, to increase this original investment where their original investment from CHIPS Act barely went anywhere due to, I think we talked about it last stream, Neil, where they got a lot of red tape pushback on some of the buildings that they were trying to build. So now they can go to the Trump administration and say, hey, look, we're actually still have $40x billion, or I forget what it was, that we can use to build more here in the United States, as long as you kind of help us with this red tape bureaucracy that's stopping us. And I think it's going to continue there in New York. Maybe in Idaho it's not as bad.
Yeah, I mean, we've got so many. So yeah, these are the inflation, but we've got so many plans, so many commitments. It's all about cutting the red tape. It's all about giving them the permits to build, maybe the energy requirements as well, because the money is there. And the money is literally being committed to be spent. So just let them spend it.
And Neil, I'm curious to see, like, I'm curious in the thought process of some of these companies when they announce these deals. Like, do they say some crazy numbers because they know red tape is gonna push them back a little bit? That they're like, oh, let me say 60 billion, but I know on average because of the red tape, I'm actually only gonna do about $40 billion, and that's the number I actually want to get into. I wonder if there's some thought process behind there.
Probably, like, this is the opposite. This is overpromise, underdeliver. So these are the PPI numbers. Again, good reading. You might say, okay, maybe tariffs don't have an impact, or maybe the tariffs are not yet having an impact. Remains to be seen.
Yeah. I also think Micron, talking about Micron, I think yesterday they posted on their account, Neil, that they are already shipping something with HBM4. I forget, it was an HBM4 update. I didn't really look at it, but I'm pretty sure if you go through their to their X account, I think it might be one of the newest posts with Micron Technologies. And we have this interesting question. With Micron already ran so high, would one wait for the earnings before opening a position? As these days, normally it dumps after earnings when it ran high before earnings. I mean, it works until it doesn't work. Right now, I mean, I think that's the thing with, it's like, oh, I found this pattern that works, and it always drops after earnings. I think Oracle, normally used to drop after earnings, and then it kind of like it rallied today. Yep. So Micron samples HBM4 to power next gen AI platform. So we definitely see them moving into a great direction here. With Micron, I think it's all about expectations. If Micron goes out and says, hey, look, we actually found extra capacity and we're able to build more HBM, the stock can actually rally after earnings. If they kind of tell us the same story we've heard about in the past, I think the stock could drop because it has definitely performed really nice in the past few weeks. But it's all about if there's anything exciting that they're going to give us new. If there is, then that could be, it's always a coin flip with earnings, because my management can tell us anything, something that we didn't expect that could be very bullish, or something that we didn't expect that could be seen as bearish.
Yeah, no, I agree. I think I've said this before, right? I rather go into earnings without having the stock rallying extremely hard over the last couple of weeks. And yeah, wouldn't surprise me if the stock does drop after earnings. But you never know. They might surprise us on the upside with guidance, with commentary, and the stock might just continue to go up and up. Maybe HBM revenue is going to be even better than expected. Remains to be seen. We have here actually comments from one of the big competitors out there, SK Hynix, CEO said the following: growing tariff uncertainty, particularly from US actions, could disrupt the semiconductor market in the second half of 2025. Speaking at the company's internal event, he urged teams to stay focused despite geopolitical risks. EVP struck a more upbeat tone, citing a strong first half and confidence in SK Hynix's edge in HBM and DRAM tech. So, okay, I guess mixed mixed signals here from SK Hynix, but yeah, nothing that surprised me.
I would say maybe at least I don't know how much capacity they do. Probably have a lot of capacity being built overseas. I wonder how much Micron might benefit dramatically from some capacity being built here in the U.S. So I wonder if that can help Micron a little bit more when in kind of the AI space. But the consumer space with tariffs, I think that's still I mean, we saw kind of like a 55%. I think we saw still on China, even with the potential good trade template deal, like a template of it. So that's still gonna impact, right, the laptop space, the a lot of these electronics that have a memory solution within them.
Yeah, no, I agree. Quickly touching on this one, if the choice is to open a position between Uber and Rocket Lab, what makes more sense at this stage? Well, it depends, right? Because if you want to hold, let's say you buy now, you can touch it for the next 10 years. Probably I'd say Rocket Lab, just because of the future potential of maybe a 10x. So yeah, probably Rocket Lab, but I own both, so I don't mind. But yesterday, Jose sent me this. CoreWeave reportedly stepping in as a key backend player in the Google OpenAI partnership. Per Reuters, it will provide GPU cloud capacity built on NVIDIA tech to Google Cloud, which will then resell it to OpenAI to support demand for ChatGPT. Even rivals are teaming up now to keep pace with AI's computing needs.
This one is so weird to me, Neil. I mean, first, I think the first question that came in is like, why didn't just OpenAI go straight to CoreWeave like it has in the past? And I think, Neil, at the end of the day, it's all about capacity. What we heard from kind of Oracle, right? I mean, it's all about capacity. There's just too much demand. I think during earnings, we heard from CoreWeave that they had actually announced a new hyperscale customer, but because of some of the legal frameworks, they couldn't actually say the name during the earnings call, but you can go to their website and can kind of guess who it was. Some people found out that Google is now on that list that wasn't on the list before of the customers going. So many speculating that the new hyperscaler was Google. So I think Google in general, Neil, was doing what a lot of these hyperscalers are doing right now, where they're buying extra capacity because they know they need it. But there's either one, they don't want to buy the chips because they might feel like they're overbuilding right now, or they just can't get it. It could be we don't know the actual reasoning behind them. Maybe there's the capacity still. But I think Google just originally, if this is true, Google was just originally trying to increase its capacity. OpenAI was looking for more capacity. It probably went to CoreWeave, and CoreWeave said, look, we don't actually have any more capacity left, but we actually just sold some to this customer. Maybe you can talk to them and work something out. So I think that's what ended up happening, and OpenAI ended up kind of working here with Google with this. Again, I don't know if we're ever going to hear if this is true or not, Neil, but it does kind of showcase that if it is true that the demand for AI applications, and actually it is true. I mean, we heard it from Oracle, that the demand for AI solutions is massive still.
Yeah, I mean, you see, going back to that question, Nebius, CoreWeave, this again puts concentration risk at the center of my question here, right? Because this is coming after, right, that $12 billion partnership or commitment from OpenAI to CoreWeave that happened, I think, a couple of weeks or so ago. And yeah, despite them now going through Google, it's still because of OpenAI. And so I know with CoreWeave, there is a lot of concentration risk, I'd say, but I guess as long as they keep partnering up and they keep spending with CoreWeave, there shouldn't be any issue. And that also gives CoreWeave more time to maybe diversify more, right? To go worldwide and attract even more and more customers. So the likes of a Microsoft, OpenAI, and all of that become a smaller percent
Yeah.
of the overall revenue, which is something that Nebius does not have a problem
Yeah.
like that at the moment, because they are pretty
And,
diversified.
and to be honest, Neil, though, for me, I actually enjoy that they only have the hyperscalers, though. Or kind of, I like. It's weird, but I do enjoy that
Mm.
that customer concentration in this space. I believe in this space, if you have one of those big players making these contracts with you, they're making a multi-year contract. They're not making something for a few months. And I appreciate that a little bit more in the AI infrastructure space, opposed to maybe and I understand the diversification customer basis is also has its pros, but I feel like with that one you also have the risk of what happens if that company goes under. What happens if that company in the AI space, we know right now that not every AI company is going to succeed. So at least right now, I think your hyperscalers have a great view of the demand that they need, so they're willing to make these long-term contracts. Where some of those smaller players, they don't know the aspect of how much they might need in the future, so it could create some turbulence in the future. So I definitely get the point of the concentration risk from the big cloud service providers, but it's weird that that's what I really like.
No, I understand, because it's less risky, right? It's
Mhm.
like what Broadcom CEO said, I think a quarter or so ago, that they're only working with the big boys, the ones that they can
Mhm.
actually scale. And that makes sense to them, right? Because you don't want to start with a small startup and then you can't even, well, ramp it up. It makes sense. Same here with Corey, right? The fact that they are only working with the $1 trillion companies
Mhm.
probably is securing the revenue promises, let's say.
Mhm.
But for the future, you would also like to see
Yeah.
more
Yeah. And
companies outside
I,
of that.
I think the main reason, is because of the commentary we hear from companies like Oracle, right? Oracle has to say, I'm got to push customers away. I got to wave them out. I can't take them. Um, so maybe once that sentiment changes, my sentiment about the customer concentration might change as well. But I think for as long as we're in this market dynamic, that customer concentration is okay with me. But maybe if it was a different market scheme, I would enjoy more of a breakdown that Nebius provides.
Yeah, and I would also agree here with this comment. Nebius has a more capable team just because of their track record before.
Mm-hmm.
The fact that they did build Yandex, at what, $30+ billion company in the past, and now you're basically getting that same team for a company that's worth $10 billion, $12 billion or so. I think that plays a big part in my thesis, of course. But
Mm-hmm.
as long as the money keeps flowing to to the CoreWeaves and the Nebius, I think we'll both
Yeah.
be quite happy.
And Neil, maybe while we're here with CoreWeave and Nebius, I would love to hear your thoughts. I don't know if you read a little bit about it. If not, I don't mind giving a quick summary of it. But NVIDIA yesterday, we had the GTC. We talked a little bit about it, but it was a little bit too
Mhm.
live for me to digest a lot of the
Yep.
information. But one of the things afterwards that I found really interesting was NVIDIA released this product called Lepton. And during the keynote, um, NVIDIA CEO called it as the Uber of AI cloud compute. And it's only open in Europe right now, or it's expected to just be open in Europe. So the concept of this, Neo, is think about Uber. You have a driver and you have someone that needs a ride somewhere, right? And you as a rider, you can order your drive. Now with this Lepton, I'm gonna simplify. I'm gonna say it's an app. It's not really an app, but let's just make it seem like it's an app. Let's say I'm a AI machine company, AI machine learning company, and I want some AI compute. Now there's this marketplace connected through NVIDIA's middle gate or bridge that gives me all these different companies that have capacity available to them. Um, and it makes it easier for me to find capacity and kind of reduces a lot of the maybe barriers I need to go through to kind of get that compute available to me. I think it's great for NVIDIA because it lets them see actually where the demand is coming from. Oh, look, I actually see a lot of demand here in France. Maybe I should start maybe working with someone to build a form of AI data center there. I think it helps them understand a little bit more of the marketplace. So I think it's great for NVIDIA. I also think it's great for the end user, because they're able to get all these available capacity as quickly as possible. And that capacity, Neil, doesn't have to be in Europe. That's the important thing, right? Because right now, Europe is a little bit developed in forms of AI infrastructure. So let's say you are a player
Not
who
just
has
AI infrastructure.
So let's say you have a massive AI infrastructure in United States. You can kind of put it in this marketplace, and now you'll be able to kind of sell off some of that USA capacity, that Asia capacity elsewhere really, really quickly. So I think the overall concept is good. What worries me now, though, Neil, is now you have an ability for CoreWeave to kind of enter the European market without actually being in Europe. What does that do with the competition like Nebius, like Nscale, and like all these other players that do have that opportunity there? Because just like in the marketplace, now when I, as a customer, let's say I was a customer, I see 5 different options. Now it's going to become some form of pricing war, right? And again, this is just very early innings, so there might be some caveats to a lot of these things. But you do now have a place where one customer can view a lot of potential customers, a lot of product at the same time, where it might incentivize a form of pricing war. So how do you see this, Lepton? And more specifically, right, how do you see it with like a Nebius type thing, where they do have a lot of AI infrastructure there in the in Europe?
Yeah, so it's the company they acquired, right? It's the Chinese GPU cloud company that they recently acquired, or is that just the same name of the company and they use the product now? Because NVIDIA did acquire a company called Lepton AI, right? So I assume it's the same thing.
I assume it is. Yeah, it is. It seems, yeah, reported AI buyout, Lepton AI. It is. But I do think now, Neil, being kind of, it's when you're a startup, but now you're under the reign of NVIDIA, it adds a lot more credibility to it. And they're able to add it to kind of a lot of their applications where it makes it easier to use. So while the concept was always there, and there's a lot of concepts like this, I think now being under the NVIDIA branch, now if I am an AI customer, back then maybe I didn't know about Lepton AI, but I know about NVIDIA and I can kind of see this from them. I think that increases that marketplace exposure.
Okay. Wait, let me counter it with a question. Do you see this as a negative for companies like Nebius or all the other names that we see here on the screen? Because if you say that it is an Uber type of market and distribution, then I'd say that a Nebius will just get more reach and visibility thanks to this.
Yeah. So I think there's puts and takes, right? So I don't know how to see it. And obviously, if you had a lot of partners with this Lepton, and for you to have a lot of partners, it means that the company that's partnering believes that they're getting something out of it, right? I mean, if you're not partnering with it, it means you don't believe you're going to gain anything out of it. So I guess there's some benefit from it. I do believe that's one of the big benefits, right? You do kind of get that exposure now, just like if you go to any marketplace, you get that exposure of that market, and NVIDIA is the biggest market here for AI. But the question for me, the one I still have a hard time answering, is what is it going to do with the pricing? Is this going to force a really strong pricing war? And is this something that NVIDIA even wants, right? If these hyperscalers stop making less money, are they going to buy less chips because it's like, oh, now I don't make that much money because there is this pricing war? So I don't know. It's interesting. I like the overall top level concept of it. I think it's great to have this marketplace of AI infrastructure. And more importantly, I think it's great that it's ran by NVIDIA, because it gives them the view of where they can maybe overserve, where they're underserving, where they can kind of shift some of that supply chain. The questions that come after that, I don't know, and I think we're gonna have to wait to see. But on the top level, I do believe it creates at least some pricing war fights. And that might not be something I'm too excited about.
Okay, so to me, and the Uber example that you gave is a pretty good one. So to me, it does exactly the same thing as a let's call it a fleet operator, right? That goes on Uber, gets that exposure, so you expand your reach, your visibility. Same thing here, I'd say. Same thing as the Uber platform, increase utilization rates, so monetization of all of your GPU assets. Because, well, let's say you didn't get that visibility, yet you have that capacity. Now that you have that visibility, you see, oh, actually now I am at full capacity because I'm getting more and more exposure through that marketplace. Of course, you just said the pricing power or pricing war. So I'd say pricing power might also be a big advantage here, because if you operate your business right like a Google, for example, where the cost of ownership, total cost of ownership, is much better than your competition, you can crush your competition if you have enough capacity, right? And then, of course, yes, prices will go down. But as we've seen right during the DeepSeek drama, if prices go down, usage will start to go up. And that's how you will keep making more and more money, because that's in essence what every big player is thinking right now. Build, drive down the cost. Inference will just go up and up and up. Usage goes up and up and up. Token generations goes up. And that's how you make your money. So I think that's why, because I don't think NVIDIA would want to hurt their partner ecosystem.
I agree, Neil.
Yeah.
And I think now, I think this is actually, it makes a little bit more sense now with your thoughts there, and with Oracle's earnings too. I think this is a very healthy application and solution in the market dynamic that we're in right now. And again, we heard from CoreWeave, from Oracle, that they have to shoo or wave customers away. I think if we continue in that market dynamic, we don't really have to worry too much about a pricing war of everybody trying to fight for the pricing. Because if in theory there's that much demand, most of these players are going to be working at full capacity. So they're going to go, hey, look, I have this much capacity. Okay, I booked in. I'm out of here. But the demand is so high that we're going to continue to see that. So I feel like maybe as long as we're in that market dynamic, then something like this would be extremely beneficial for everybody. Now, if we start to see maybe a shift between the supply and demand curve, I think that's when maybe this becomes some of the questions that I had previously about how it can impact some of these margin and pricing power. So thank you for that, Neil. Thank you.
You're welcome. You're welcome. To answer a couple of questions.
So sorry. Yeah, let's answer some questions here. I think we did a little bit too much there, but
it's fine. It's fine. So AMD event later today, we're going to start streaming at 6 p.m. European time or 12 p.m. Eastern time. That's a half an hour before the event starts. So the event is already live on both of our channels. So click remind me so you don't miss that event. What time does the Chime IPO take place? It's today, whether it's directly when the market opens or an hour, 2 hours later. Honestly, I do not know at the moment. So
yeah. So Neil, what are you expecting here from this event? I mean, I'm pretty sure we're going to do a quick preview as well before the stream earlier. But for those that can't make that stream, what are your must-haves as an AMD investor from this event? What are your okay-haves for what are the things you are truly expecting out of this?
So first up, I think I would love to hear about maybe a new big tech player that is partnering up with them, maybe committing to AMD for maybe the MI400. That would be great. Would be a very good start, actually. Then more info on the MI400 launch for 2026, and hopefully already an announcement for 2027. After that, anything positive on the developer ecosystem for ROCm, I think is a big plus. I think that's what's going to happen because we have here developer speakers. So clearly that's going to be a focus. That's going to be focused today. So we've got all of these people talking today at the event. But of course, we're only going to focus our stream on the Lisa Su keynote and not the other 3-4 hours of developer talking. So I want maybe a new big tech customer being announced. I think the MI350 will be launched today on stage. Would make sense. Then some roadmap updates, and I think that's, I'll be happy with that for this event.
Yeah, I agree, Neil. I think for me, the biggest thing is definitely going to be that a new big customer. I think the way they've been hyping it, Neil, I can't expect them not to announce someone big. I don't know. I think it's either going to be Amazon or Google. And I'm hoping we're getting something there. I think that for me is a must need. But if it doesn't happen, I don't think I would be bearish on the stock. But I do believe that can create a massive negative bearish sentiment for the stock. As I was kind of looking through some of these sentiments of expectations in online, Neo, and a lot of analysts are expecting similar thoughts of a big customer based on what the company has said in prior earnings.
Agreed. We have the usual kick comment here.
Comment.
But I am very skeptical about this data point. That Germany has more data center than China. I've seen that as well, but I don't know how up to date that number is. And Germany is just one country in Europe. Europe.
And I would also want to know, like, I think there is a big difference between your traditional data centers and AI data centers, right? I wonder if there's a breakdown between there, because right now your traditional data centers, which are just CPU based, are still being used, but it's not as important in this current age that we're in right now.
Correct. Plus, we know this for a fact that energy-wise, China is way ahead than even the US at the moment. So that's why my comment, imagine the customer is Intel.
I like this comment here, question here, Neo. When the crazy AI chip demand cycle ends, or at least equalizes the supply? You know what, Neo? I think this is a very hard question. I think you'll have indications of when that's happening. And to me, the biggest indication, Neo, is the lack of innovation in AI solutions. And I think right now there's no lack of innovation. I mean, you still have kind of like the robotics market still trying to kick in. You have the autonomous market still trying to kick in. But and just large language models. I mean, you have OpenAI, you have Google with the VO3, with all these AI solutions. When I start to see a slowdown of that, and I think I've talked about it in the past, Neil, when I feel like I stop going, oh wow, you can actually do that now. That's when I'm gonna start to worry about this. Demand not going to be as high as supply. So I don't see that happening right now. But in this AI space, Neil, the unfortunate thing is it can pretty much happen pretty quickly. It's something that it's very hard to predict, and sometimes it sucks because it might, once you see it, it might be too late. So I think that's one of the risks with the AI space in general, and with any technology in general, right? It's like it's very hard to try to time a lot of these cycles. Right now, I do believe we still have much up on the cycle based on what we're hearing from companies like Oracle, from companies like Google and Broadcom and all these other players.
We did have, I don't know if you've seen this news yesterday that came out, Saudi Arabia's AI infrastructure. Where was it? Here. So the information reported that the Middle East nation is seeking investment in a cloud project from AI chip makers AMD and the networking giant Cisco system. So, I mean, this coming out a day before that AI event, could they talk about that during an event, right? Could they talk suddenly about their big plans? Of course, we've heard already about the Humane one, the $10 billion Humane project. Could this be a new one and another one that would maybe, I don't know, grow the backlog for MI400, maybe whatever comes after that? Pretty interesting talking here about AMD and Cisco.
Yeah, when I saw this last night, that was the first question that came to my head. Is this the old Humane deal that we kind of saw during this whole UAE trade deal, or is this something new? Because the stock did jump up a nice amount. Um,
I think it's
did
new
jump up a nice amount. Oh, it's new.
based on these comments right here, because here they
Yeah,
talk about the other announcement that already happened. So
what happened?
I assume it's a new.
Yeah, has already committed.
It's a new,
Yeah,
yeah.
which was weird though, because I saw this. I mean, this would have been. This is massive. I mean, even a few billion a year or a few hundred million on AI chips is massive for AMD. So the stock jumped after hours yesterday, I saw, but then it kind of pulled it back. So that's why I was a little bit skeptical on the actual reports themselves.
Yeah, I was also surprised because when I saw this, I was like, okay, the stock is probably up 5%, 10% after hours, something like that. But no, barely moved. So again, these are just reports. I guess, again, in a couple of hours, we'll know for sure if
Yeah,
they're going to
I'm pretty
share
excited for
something
this
extra.
event.
Yeah. So we'll see. The market will open in 18 minutes, ladies and gents.
And then I mean, I think with the obviously we're going to hear a lot about kind of the data centers, AI chips here, but I'm pretty sure we might hear about kind of like AI consumer, AI events, AI chips, right? I mean, I'm pretty sure. I forget if that was a topic in previous. I don't think that's going to be as interesting to many investors, Neil. But the great thing for AMD is the consumer space and the embedded space are still a good portion of total revenue. So any additive there can definitely benefit the stock earnings per share, stock revenue dramatically. So I would say if you are an AMD investor, I know those don't sound like the cool things, but it could be very accredited to valuations of AMD in general.
Yeah. So after the keynote, choose the discussion session and workshops right for you. Then come back later to watch on demand. Plus, make sure blah blah blah. So this is what we should be expecting. But here, she's AMD executive Lisa Su is going to talk about industry luminaries, advancing AI, insights into the market landscape, and updates on their end-to-end AI solutions, products, and ecosystem. I mean, last time she talked about that $500 billion AI accelerated market, right? So I guess she will have to back it up yet again and maybe explain thoroughly how they're going to reach that. Hardon could not reach that, take all the whole 500 billion, but how they're going to take tens of billions of dollars, because that's what they told us, right? Last earnings call. We think this side of the business, the AI revenue, can generate tens of billions of dollars in revenue for them in the future. How much is it, right? What is tens of billions of dollars each and every year for the next 5 years, for the next 10 years? Same with that double-digit growth, right? Strong double-digit growth to me doesn't make any sense. Doesn't say anything. Is it 20? Is it 30? Is it 40? Is it 50?
It's strong, Neil. It's strong. Just take it. It's strong. Okay.
It's strong.
Neil, of two things that I'm actually also would be excited to hear about is an update to total addressable market. I think AMD has kind of every year talked about it. I think originally started with that $400 billion the first time they released the MI300. I think the last time, which we saw in this past December when they released the MI325, they increased it to 500 billion, I think, total addressable market. I would love to see what they've changed here on the total addressable market space. The second thing, Neil, is they've talked a lot about it in the past, and they've never really kind of talked about it during these keynotes. Are they going to bring anything in the ASIC space? We've heard little discussions here and there in random conferences, but is this going to be the event where they maybe mention something about that? If they do, I do believe that could be very, very bullish as well.
Yeah, and I think, I mean, you said it a day or two ago about the handheld device, the Xbox One. So that's another win for them. I assume they're still going to win maybe the PS60, the next gen gaming console, but yeah, more focused on the other custom chips. Maybe they'll talk about it, or maybe this is purely just going to be an event talking about the AI side of the business, GPU side of it, data centers. Maybe now even more color on the whole AMD offering with all the acquisitions that they've been making more recently. Maybe tell us now, actually package it nicely, show us a roadmap on how things will evolve for AMD. I think that could be very, very useful.
Yeah, and I think this is one of the things that is. I agree here with Achilles. Next year's hot theme will probably be AI agents and stuff. And Neil, I think this is what gets me excited when you see large language models get cheaper. Um, right? I mean, we've heard it from Jensen that now we're going to this thinking process that large language models go out there and think before doing something. An AI agent is going to do something that's going to be thinking nonstop. So you need for this to be a viable solution, you need AI inference to get cheaper and cheaper. So I do think either the end of this year and starting beginning of next year, Achilles, that this is definitely going to be one of the hot themes and one of the things that's going to be driving the inference demand, and in theory the demand for AI chip solutions. So that's pretty excited there, Neil. I like this one from Vin. What about humanoid robots? TSMC CEO mentioned that chip bookings for humanoid robots is fully booked. Vin, I did not. Where did he mention this? I do know he recently has been having some events and conferences that I can't get transcripts to. But Vin, if you have some information on that, we'll love it. But that's obviously a growth opportunity. The robotic space in general is also something to be there. Stevie here, the CPU is what's carrying their AMD's earnings growth right now, right? Anything somewhere else would be insane. I think yes. In the consumer side, for sure, it's all CPU. I think in the data center, they are gaining that market share in the server CPU, but I do believe they're making some money off the AI GPUs already. But that growth is still massive there.
We can actually see the split, right? Data center and client revenue, which is, I would say, the split that you're talking about. And that's basically it, right? Data center is now taking over. A client is still very strong for them, and that's something that doesn't get talked about enough. It's the client side of the business that is still very, very strong and growing. But I still say, and by the way, now reporting wise, gaming is inside the client segment.
Yeah.
So don't forget
and
that.
the data center has both their CPU and GPU. I wish they would have broke it down, Neo. I would really do. But I think it's unfair. I don't think many players actually break it down. I mean, NVIDIA, they do have kind of their CPUs. They don't break it down either. So I can't ask for one and not ask for the other.
Treason. But yeah, no, it's been, I'd say, the same as with NVIDIA, right? Because 2-3 years ago, NVIDIA data center was even not much, but smaller than the gaming segment. Then data center became like a 10x since then, and gaming hasn't really grown by much. But with AMD, we can see here that data center continues to grow, but the client side of the business has grown quite nicely as well, and definitely helps increase the overall growth rates of their business, which also means they're taking more and more market share, which of course is great. And don't forget to check out FinChat down below, 15% off. And if you're a new user, you'll get 2 weeks of FinChat Pro for free.
Yeah, which is good. No credit cards needed either, which is pretty amazing. So you can just sign up really quickly.
I do want to touch on this question right here. Euro dollar is really a problem for European investors. Thank you for the live. Well, thank you for. I'd say
thank you for joining.
Yeah, voila. I'd say that it is a problem only if you are now selling your US stocks and wanted to convert to euros. It is way less of a problem if you have euros and you want to buy USD stocks, because your euros are now much stronger than before. So it's less of a problem on that side. It's more of a problem on the selling side of things. Now, if I sell, I keep my USD. I'm not converting it now to euros. I don't want to lose on the change. But when I add cash now to the portfolio, I am earning. And I am winning on the change, because now my euros are worth more than my dollars, which means that I can buy more with the same amount. So I'm fine. I will be losing if I sell and convert to euros. That's for sure.
And here, Vin just appreciate this. It was on TSMC's AGM, but held in Taiwan. I'm gonna see if I can get that. For some reason, the concept, the platform site, where the place I get some of these transcripts doesn't have AGM.
Probably maybe it's in Taiwanese.
Yeah.
Maybe that's why.
Lame.
Maybe it's Duolingo, partner up, and we will learn some Taiwanese or Chinese.
We have this question, Luna, is data center the same as AI infrastructure? I want to say yes and no. There are, if you're just wanting to create kind of a data center that wants to just do pure AI and nothing else, then that's what Jensen is now calling an AI factory, and it's pretty much just chips. It's just concepts of you just recreating massive amount of tokens. Now, data centers, you use them for a lot of other things, and you need a lot of different types of workloads. Usually, most data centers are run on like an x86 CPU, and then some form of AI accelerators, which luckily for NVIDIA tends to be like the B200 and the B300. So they're similar in kind of style, but there is kind of like a difference between some of the workloads. So if you want a true AI infrastructure, you're most likely looking for like a NVL72 system from NVIDIA. If you want kind of like, and most data centers now, they are kind of like a hybrid between, they're like a hybrid between your traditional data center and maybe like an AI factory, where you can do a little bit of both. And those are mainly like the ones that are run on some form of x86 CPU and some form of NVIDIA or AMD AI accelerator or ASIC solution. So yeah. Let's see. Adobe earnings are tonight. No small, right? I agree. Well, obviously agree. I mean, it's on the schedule. Any thoughts here? I don't know, Neil. Haven't been too much focused on this one lately. So I really don't have any thoughts. I'm pretty sure there's nothing destroying this business at the moment. But I think investors and analysts are gonna be really wondering more on. You talked about it before, Neil, the AI monetization.
Yeah, I mean, currently, let me show. Currently, we're at $414 for Adobe. Stock is still down year to date a little bit. Has seen, of course, a very strong recovery over the past month or so, not 3 months, but since the lows here in April. Market cap 175 billion. Margins are still very good margins. PE trailing 27.4 times, and the forward one just under 20, for a company that's expected to grow revenue around 9 to 10% for 2 years, and EPS a bit faster than that at 11.3%. Over the past 3 years, the revenue has grown at a CAGR of 11% or so. So solid compounder. We can see from cash flows as well here. Solid compounder cash flow wise. I think they could have done a little bit better. Still not the worst, but maybe they could have increased it a little bit more in the last couple of years. Of course, they've been investing a lot, plus they have that one time, I think it was $1 billion hit because of that failed Figma acquisition. But all in all, revenue is still expected to grow. Let me show you exactly. For when the last 12 months, of course, you have that big increase, but then it's expected to grow 18.2%, 11%, and then another, let's call it 11% in fiscal 2027. So still low double-digit growth, but that's what you get with Adobe. Solid compounding growth, buying back shares, growing, and maybe we will see an acceleration in growth if they successfully monetize the AI features of the platform, and if they keep all of their users inside that Adobe ecosystem.
Yeah, I mean, to me, Neil, pretty impressive that they saw that free cash flow continue to grow even with all the investments, like you mentioned, they're making on AI. I do believe they are investing a nice amount there on R&D. I just want to give a quick shout out to Nathan, Neil. He brought some great points that in the data center, EPYC is the key growth in the first half of the year. We've seen that right now with the MI300, with the loss of the MI308, and many of their customers waiting for the MI350, there's not much growth expected from the AI accelerators this first half. Most of it is driven by the EPYC growth overall. Then Vinvin, AMD coming up, new chips for autonomous. I do believe because they have that acquisition of, man, I forget the name of it, Neil. What is it? The big acquisition that they made for the embedded market.
Xilinx?
Xilinx, thank you. They do have a lot of embedded solutions for the autonomous space. And the synergies between this is great. So we've heard about a lot of their discussions in the automotive space and some of the other embedded markets. And Nathan again is coming out here clutch with, and EPYC has the highest gross margins. Yep, this is one of their biggest, best products for them. And the great thing is they definitely seem to have a nice tech leadership at the moment. Yeah.
Here you have Jose, your best friend salesman, Jensen Huang, at the booth of Nebius in GTC Paris.
He's like, yeah, so what are you guys doing here? I thought CoreWeave was supposed to have this booth.
Don't tell CoreWeave, but I prefer you guys. What question did you
Neil,
want to pull
did you see? Nothing. I was just, I like this question a bit, but before market opens in about 3, maybe we can answer it quickly after. But Neil, did you see that NVIDIA is going to help Mistral AI build AI infrastructure?
Yes.
NVIDIA is just helping everybody build AI infrastructure.
What I said yesterday, but clearly you did not listen.
It takes me time to process, Neil. It takes me time to process.
Yeah, there was Mistral and there was also the president. No, Macron came there and they talked about that.
Did he come?
That's what Jensen said. Unless
he
Jensen
said he was
is a liar.
Come. Yeah, liar Jensen.
But yeah, I mean it makes sense. Again, NVIDIA is the big bro out there.
Yeah. So AMD has their big event today. So we just did a preview of the big AI events coming, and maybe we're expecting some new customers today.
And we're live during the event as well later today.
Yeah. Yeah. Stevie is today. Is she wearing? I think she wears her suit jackets.
Yeah. I wonder if it's going to be a blue one.
It typically is.
Yeah.
There's always a pattern to these CEOs.
Do you guys have any cybersecurity stocks in your portfolio? Do you have one, or is it more in the ETFs?
I have CrowdStrike, Neo, but I don't think it's like a big enough position to make it really like a thing. It's definitely not in the top 5, maybe not even in the top 7.
Okay.
But I do have it.
But you do have it. Okay. I don't have any, I think, other than maybe Google if they do acquire Wiz. If that acquisition passes next year, then I guess I'll have a player. That acquisition is still going under the radar. I think that's going to be a crazy one if it passes. But we'll see. I think we still have time for that. Market is not yet open, but I'm just showing you the heat map of what has happened yesterday at the close, just so we see the difference when it does open. There is another CEO with the last name Huang, also as the same as NVIDIA. I can't remember which one it was, but
really,
it also has to do with an NVIDIA partnership, I think.
I would never introduce myself as my first name. If I did that, I would just always go with CEO Huang, and then let the algos do what they do with that.
Can't remember who it was, but okay. Markets are open, so let me do the magic
I saw GameStop
here.
was down like 18% or something. That they did a new offering.
Oh no, the horror!
The horror. They need to build. Except I mean I haven't, obviously I don't follow it as much, but I've seen their cash balance sheet is actually pretty impressive with all this type of offerings and sellings that they've done in the past.
Well, I sure hope so.
But now they got to build cash to build up that Pokemon inventory. It seems as everything's going crazy market price.
So the market is open, and this is updating slowly but surely.
Slowly.
So what do we have here? The only green one is, of course, Oracle, 7.4%. All the rest is basically flat, I'd say.
Yeah, CoreWeave's up
AMD,
2%.
Of course.
Oracle 7%. We also have a semiconductor equipment company called Bessie, up 8% today. Neil, do you know if we ever got confirmation about Wolf? Is this one really getting ready to file bankruptcy? Was that confirmed or no? I know it was a report, but I don't know if we ever got a confirmation on it. Let's see, other tech.
No, still no real confirmation, it seems.
No real yeah.
Palantir is up, of course, 0.47% to $137. AMD event today. We will go live 12 p.m. Eastern or 6 p.m. European time. Event starts at half an hour after.
I'll be a little bit late. Yeah.
But yeah, stay tuned for that one. Our video live is already scheduled, so you can.
Yeah, I gotta schedule it.
So mine is already scheduled.
Yeah, Neil's is already scheduled.
Boeing is down because apparently the plane crashed again, unfortunately.
Oh wow, that's wild.
Yeah, it's horrible. Micron is down 1.5%. Not surprised. Jensen did give a shout out to Quantum, so it's the switcheroo here.
But Neil, I listened to the Q&A session, and he kind of backtracked a little bit. Because someone asked him that during the Q&A session, was like, hey, have your thoughts on quantum changed? And he's like, on your normal quantum, no, that's still the same. On typical quantum computing. What has changed, though, is his thoughts on quantum traditional hybrid or quantum hybrid, which is quantum computing using GPUs to make sure you have a lot of the error rates fixed or whatnot. So he kind of backtracked. It's not like your traditional quantum that he's bullish on. It's more of that hybrid approach.
Yeah, it makes sense. Like he probably wants to attract more people on CUDA-Q, and he doesn't expect anything significant for the next 10 years or something like that, but at least attract them, suck them in to the NVIDIA ecosystem, which is smart. United Health, I'm up 15% already in 1 month. Congratulations.
Nice. Congrats.
Now we've got a little bit more red. Google down 1% because why not? Meta down 0.6. What else? Palantir now down. So whoever said Palantir up, well, jinxed it.
You jinxed it.
Walmart down 2%. Amazon 0.6. Tesla flat-ish to down. No real big movements, right? We talked about, can we buy the dip because futures were red, but it seems like, well, markets don't care unless we'll have to wait an hour or two to actually really see what is going on in the market. Let's see what CoreWeave is doing right now. CoreWeave on the day is still up, it seems. 1.5%. Nebius, is it still under 15? No, it's also up. So we're not getting the dip that we want. Amazing stuff. AMD 120. Okay, very nice. Is Chime already available? Is this Chime?
I don't think so.
No data just yet. Okay, then let's visit SoFi. SoFi is down 1.8. Wunderbar. PayPal. What does the PayPal do? Oh, PayPal is only down 0.47. Okay. Let's see if we got
All
some
right.
big movers here on the side.
Nebula is
Oklo.
still green. Luna, Red Day, SoFi tanking. Yeah, I mean, we did see right that we had some. What were the talks? Trump threatens unilateral tariffs. So right now it's kind of creating that negative pressure on a lot of the stocks.
No, okay, it's not this one. Which one? Let's see. ASTS is green today.
Mm-hmm.
We've got Marvel that's a bit red, but okay. Pinduoduo is actually back above $100. That's interesting. Nebius is green, Micron red, Rocket Lab is red again.
Oracle,
at $27.
Oracle's doing really good, Neil. Up almost 10% right now, 193.
Nova Nordisk back above $80. Look at this nice recovery. Very nice. Very
It's so
nice.
funny. Every time
Shitetem.
it's like, I don't obviously buy all these stocks, but it's like when I saw the stock tank, like you see so many posts on X, like it's game over for this one, blah, 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 blah.
And then you have couch investors saying you guys are crazy. This is an undervalued company, and he gets proven right again. Oracle at $193.5 Ruskies.
Yeah. All right, Neil. I need to hop off soon. Need to go check in on the little one.
Yeah.
We'll be on in.
We are anyways going live again.
A few hours.
In
2.5 hours or so.
Less than 3 hours.
Yep. So thank you everybody for joining. Hopefully, these live streams are helpful and you guys have fun. Feel free to let us know anything that we can do to make it better.
We are live late today, 12 p.m. Eastern. Event starts at 12:30, so we'll have 30 minutes time to talk and answer questions. Friday we're not live because Friday is our day off. Unless there's like some breaking news, then of course we will maybe come live.
I'll think about it.
I doubt it. But yeah, but we are coming back Monday, right?
Yep. Oh, for sure. Yeah. So we'll be gone. And we'll be in a nice amount next week as well.
Yeah, Monday 8 a.m. breakfast stream. Join us. Let your friends know that we are the best breakfast stream show out there.
The best breakfast stream
on X and on YouTube.
And on YouTube, yeah. All right. Take care, guys.